A risk scenario gives you a business service, a known exposure, and pressure to act quickly. The trap is to jump straight to a technical control. In CISM, risk treatment is a management decision. Choose a response that matches business appetite, cost, impact, and accountable ownership. The four classic risk treatment paths are avoid, mitigate, transfer, and accept. Avoid means stop the risky activity. Mitigate means reduce likelihood or impact with controls. Transfer means shift or share financial consequences, often through insurance or contracts. Accept means management knowingly lives with the residual risk. Avoidance is appropriate when the business activity is not worth the exposure. Maybe a proposed data feed has low value, high regulatory risk, and no practical way to reduce it enough. Security can recommend avoidance, but the business owner decides whether to stop or redesign the activity. Mitigation is the most familiar path, but it still needs evidence. The security manager chooses controls that reduce risk in a cost-effective way, verifies control effectiveness, and then reassesses the remaining residual risk. Installing a control is not the same as proving the risk is acceptable. Transfer can reduce financial impact, but it does not make the risk disappear. Cyber insurance, indemnity clauses, or outsourced service agreements can shift part of the consequence. The organization still owns the business outcome, vendor oversight, compliance obligations, and any residual risk left after the transfer. Acceptance is not ignoring the issue, it is an informed, authorized decision. The residual risk, business impact, compensating controls, and exception period should be documented. If the risk is above appetite, the security manager escalates with options instead of accepting it personally. Knowledge check. A legacy application supports a small internal process. Fixing it would cost more than replacing the process. And even after controls, residual risk remains above appetite. What is the best next recommendation? Option A, accept the risk because the application is internal. Option B, recommend avoiding the risk by retiring or redesigning the process. Option C, transfer all accountability to cyber insurance. Option D, add monitoring and declare the risk treated. Best answer, choice B, the second option. Avoidance fits when the activity is not worth the residual risk. The manager should recommend retiring, replacing, or redesigning the process. Then let accountable business leadership make the decision. Internal systems can still create unacceptable risk. Insurance does not remove accountability, and monitoring alone does not solve above appetite exposure. Remember the CISM pattern. Avoid when the activity is not worth the risk. Mitigate when controls reduce risk effectively. Transfer shares impact, not accountability, except only with informed authority. If residual risk is above appetite, escalate treatment options to the accountable owner. If this helped, save it for your CISM review and comment with the risk decision you find most confusing.